All right, welcome to today's update for BDMs. I'll just give everyone a couple of minutes to come on. Apologies for running a couple of minutes late on my end. Hello, Reece.
Hello.
Oh, okay. Hold on, make sure I can hear. Talk again.
Can you hear me?
We're in a different location every time we have our chats. Where are we today? At home for work?
I'm at home today.
Ah,
Yeah, been busy at the minute, so I needed an admin day to catch up.
yeah. Very good. Need an admin day at home, that's for sure. All right, thank you for joining us. Now, I don't know about you, but these come around really quickly. Does it feel like they come around quickly or?
Yeah, 100%. I think, I mean, especially last month because it was a short month, wasn't it?
Yeah, maybe that's what it was. But we'll moving forward, we'll chat about it later. But even maybe even like 2 months, I'm thinking might even sort of provide that sort of better update, or the 2 or 3 months, because it honestly feels like I spoke to you last week. So, but then I don't know if it's
I
just me
agree.
or someone else.
Yeah, I agree. Even I think if we did two or even quarterly, I think would be good.
Yeah,
Or even just like so give you an example, the reports we create, we don't get those because we need to wait for the data to come through. We probably won't have those till next week. So uh, a lot of the content I'm saying will be like the week by week data, but some of the more monthly analysis that our economist does, I wouldn't get that till probably next week. So even
yeah.
if we did like maybe if we did it bi-monthly or something, and did it like the second week of the month, that would probably I should have more content, I'd say.
Yeah, I might get that information from you, because I think that that's yeah, that would be good to have, just so that it is, yeah, hopefully being a little bit more obvious, the changes. That's sort of what I'm thinking, as opposed to us just seeing it and it might feel like it's not really changing, but it is. It's just that we're talking about it a lot. So yeah, so we'll do that. But otherwise, the replays have been perfect for people, because I've been able to share this with clients as well,
Yeah.
and for others that are
There you
just wanting
go.
to have a bit of an idea. And so let's get started straight away. I'll get you. I don't know if you've got a screen to share today,
I was going to.
or we can chat.
I literally just today a talk earlier on the market. But yeah, I've got some I'll like share, but I'll just kickstart
Yeah.
in terms of. I guess let me just quickly get my screen up so I've got
And
it
bring
there.
it up, and then I can sort of have just a bit of a chat and get you to sort of yeah, explain sort of what's happening as well. So like from my end, I'm seeing that definitely less buyers agents, and I'm definitely seeing less people buying in the market. But
Yeah.
I also don't, I'm thinking that it's more because their stamina's not holding up, and they're just feeling like, why would I bother? Because it's too busy. Like, do you ever
Yeah.
get that feedback from clients where they just think that it's not that they don't want to buy, it's just that they've lost that confidence of being successful. So
Yeah, I think you're right. That fatigue is real.
yeah.
Like especially if you look at the market, we did another 2% last month. So we've started the year 4 or 5%, and then it's really been on a heater since the LM the first homeowners grant cap got increased for the no LMI, so the 5% deposit, which has just driven the floor price in Perth. So that got increased to 850, and it's just driven the floor price up to 850. As a business, like so I literally just spoke to another business about this morning. We did 20 transactions last month, so we purchased 20 properties. Only six were in Perth last month, and it's not necessarily because we think Perth's done its dash. Like Perth is definitely getting towards the home run of the cyclone. I'll show some data that I haven't probably shown before on these presentations. It's just the affordability point, right? So a lot of buyers, investors, especially first home investors, their budget's under 850, 900, and quality of stock. You've probably heard me speak about this on numerous presentations when you and me have caught up multiple times. We only buy blue chip assets and good quality assets where the owner occupier appeal is. And we're just finding in Perth that there's not much stock out there that fits those parameters for their price range. So ideally, if we were looking at an investor who was wanting to scale their portfolio and like had capacity to maybe buy one now, one in 12 months' time, 18 months, or whatever their brokers kind of said to them, we would love to get them into Perth because Perth's going to have the most capital growth. I've just told you we've already done 4% growth this year, so we're coming into March. So you're going to get that quick capital uplift that you can potentially use that equity to then buy another purchase. I think the challenge that we find with Perth is we're just not finding anything in that affordability price bracket. Anything like, we're struggling to get a unit. So when I say units, we're looking at more like the townhouses and villas. We're struggling to get units, under 750, 800. And from a house perspective, you're looking at more $1 million where we're looking for something that's got a good land component that can appreciate and is in a good area. So generally speaking, we're probably buying a few villa units around the 800 mark or 750. There's very limited stock in those assets. So probably if I looked at the 6 purchases we did last month, I'd say 4 or 5 of them were in the $1 million mark,
As
which are good
investment
properties.
properties?
What's that, sorry?
As an investment property?
As an investment property, yeah.
And are they north or south?
A bit of both. Like I think we do love the southern corridor is still probably undervalued compared to the north. But we are still buying in the north. Like we bought one up here in Craigie recently, where it made sense from a value perspective. The big thing with us is we're always going to be looking at a land versus dwelling ratio to be at least 60%. So 60% of the value of the property is in the land, not in the dwelling, because as you're well aware, and probably most of the people that tune into this, land appreciates, whereas your dwelling depreciates. And the beauty of a dwelling is you can add value. So, you could maybe chuck in 20, 30 grand, get a new kitchen, a caboodle kitchen, and or maybe just get a paint job, change the floors, and you can actually add value that way. So that's kind of the strategy that we use as a business. And we're finding now, the reason we're not sending them to Perth is probably more due to their budget, or they're overexposed in Perth. So maybe they've got a couple of properties here already, and it just doesn't make sense to get into the market this late in the cycle. But having said that, we're still doing like 30% of our purchases, 30-40% in Perth. So we still do like Perth as a market. We're just probably struggling from that affordability play.
Yeah, and I guess because investors are buying, they are very much just on those figures where if there was ever an emotional element, for example, if I was to buy an investment property, I wouldn't be as worried by the figures. Yes, they're important, but I might go in my brain, oh, I'm buying an investment property, yes, for now, but maybe potentially for one of my kids when they're older. So there's the emotional element that makes me not mind if I had to buy something more, because I'm thinking that in 20 years' time, when my kids need something, it's going to be a lot more. So I've got that emotional buffer where investors don't have that emotional buffer. It's got to work and perform because there is no other benefit. And it's like even when buying a house, like in your own home, it's like you don't tend to worry too much about the money because there's other values in purchasing, and so that's where we struggle. Can you just talk to me a little bit about what you're hearing on the ground with Rockingham and it being the new, I don't even know what the name was, but with all the upgrades, but also they just redesign. I feel like there was an article I read that was like redesigning it, and it's got a lot of money being spent into it, but then it's had some of the most growth out of all the areas in Perth. So what are your thoughts on that?
Yeah, no. I mean, just to go back to your previous point, Ash, I think that emotional investor looking at a property for their kids, we see a lot of that. Like if I was to probably most of our inquiries, like most people, like, we will always be buying in Perth, right? Because although we're a national business, we've got another office in Melbourne. We naturally, a lot of our audience comes from Perth, and not everyone's going to want an investment property for the same reasons. Purely on the data, absolutely, those clients aren't emotional, but we get a lot of clients, similar situation, what you just mentioned there, where they're looking at how unaffordable it is now and they're wanting to get something for their kids, whether that's something for their kids just to have to get in the market, or if that's something in the local area where they live, so the kids can be close by. We see a lot of that. So much so, two mortgage broker referral business partners of mine last week hit me up, and both of them the exact same reasons. One's for their kids just to have a property to get into the market. The other was, I want a property in the local area for my kids as well. So a lot of people are now starting to think of that, where how unaffordable, and because that's probably one main reason. The other one in Perth as well is because of the market over the last 5 years. For the first time in a generation, everyone's got equity. And some people have done really well, whether it's just owning their own principal place, or they've been able to buy some investment properties. So they're now starting to go, hey, okay, this is what the market can do. I want to get in now before the next cycle comes, and really puts it out of reach for my kids. So we do see a lot of investors like that, and they're slightly different because their briefs are going to be a little bit more targeted. But we will, I'd foresee the business, no matter how big we get, we'd always have a strong presence in Perth just for that particular reason. So, yeah, that's very common from what you
So,
said.
if we find that people might get to a stage of investing more with that emotional element, do you think
Yeah,
we might see in the next 5 years less interstate investing and more
100%.
people just investing in their own location because now they've got to justify the price with the
Yeah.
emotional side? Do you think?
Yeah, I think we've noticeably seen it with our inquiries. The only people buying in Perth now are Perth people. We know we get a lot of, just naturally through the brand. We get a lot of East Coast clients come to us. You know, if we'd looked 6 months ago, they were like, "We want Perth, we want Perth." Whereas we tell them where we're going to buy, but now when we got a little bit of kickback when we were recommending other areas with those clients, say 6 months ago. Now there's no kickback. So I would say from our business, all of our investors are Perth based, which are investing in Perth at the moment.
So for that reason, I mean, just to go to the next level for those that are listening today or watching the replay, then that would, be something for a BDM to be considering, where maybe they might put less of a focus on those referring partners, or like for me, I might connect with a lot of people in Sydney or Melbourne, and maybe from a marketing point of view, drawing that back into our local markets and
Yeah,
making sure that the BDMing and marketing we're doing for investors, we're bringing back to local, which is
yeah,
something I mentioned a couple of years ago. I said to a few BDMs, don't put all your eggs in one basket. The interstate investors aren't going to be here forever. Like, make sure you're still staying in touch with your local markets. But I think now, after sort of what you're saying, it's probably time to really escalate that from a marketing investors in your own area, because
yeah.
they're the ones that are the buying. Yeah.
Yeah, I think that's a great point, Ash. Like we probably have, it has probably shifted. The East Coast has definitely dominated the early part of the cycle, and even up until say 6 to 12 months ago. But what we probably noticed was, yeah, maybe 12, 18 months ago, the the ratio had split, and it had been more local investors that were focusing on Perth. So yeah, I think from a BDM perspective, speaking with your current clients, there's definitely opportunity for them to go again in the Perth market. And what they'll probably find is, having a conversation with those clients is, I'd be, I'd, I'd be surprised if more weren't concerned to invest outside their backyard than more were keen to invest outside their backyard. So I think there definitely still is an opportunity, or even a bigger opportunity now, where if any of those BDMs have Perth-based investors, and they've got capacity, you only got to look at the rent roll to see when they purchase that asset, and you need to throw a dart at a dartboard in the last 5 years in Perth, and you would make money where you bought. So I'd imagine if they've held that asset for longer than 12, 18 months, there's a decent amount of equity there. And I think you'd be surprised how many will be still reluctant to invest outside their backyard, but are keen to go again. So yeah, I think they're definitely, from what you said there, I agree. I reckon there's an opportunity for sure for Perth-based investors to potentially get an investment grade asset. And I wouldn't be surprised if, when they have the conversation with those clients, they're in the exact same situation as the example you just mentioned earlier, where I want to get something for my kids, or I want to get something that is, it's a longer term hold strategy just to have in the portfolio in case I want to downsize and property becomes unaffordable at that point.
And also something that I just thought of, which I'm not doing now, but I'm going to share the idea with everyone, is I was just thinking that we really should be tagging our clients in the back end on our software, tagging them with where they live. Like, yes, we've got their addresses, but actually putting like they're from Vic, they're from Queensland, where their actual, like where they live, so that then we can maybe potentially, if we are finding out people are going to be investing in their backyard, giving that advisory service, which is something where, PMs are needing to step into. And on that advisory level, we can sort of give them information of what's happening in their backyard so that they can potentially invest there. So, I mean, I don't do it. I haven't heard of anyone doing it. So like tagging the location. So I think that might be something worth doing from a BDMing point of view as well.
100%. I mean, the more you can segment your list, the better. Like if you could segment your list to, they bought a property 12, 18 months plus ago, they're based in Perth, you could have a targeted email com going out to them because like I said, no matter where you bought in Perth, you've made money in the last 12, 18 months and there's enough equity to go again. So then you could do targeted marketing com for those clients, investing in Perth and maybe educating them on the micro markets. So for example, to loop back to your point about Rockingham before, that sort of area, especially around the Henderson where the AUKUS program is, you only got to look, and I might have even mentioned this on maybe my December update or my January update. I think 3 of the top 5 performing suburbs last year were all around that Henderson AUKUS program that's going on. So there are, and a lot of that is sentiment because there's a lot of talk about the AUKUS program. It will generate over 3,000 jobs, and it's a new industry not relying on mining as well, which is going to help. But what that does show you is there's micro markets within a city level. So even when the Perth market was stagnant for 8-10 years, there were still markets within that perform well. So yeah, absolutely. I think from a BDM level, you could do targeting comms for anyone if you've got the database where you can see where they're based as far as the investor or the landlord's concerned. And then you could see how long they held that property for. You wouldn't even need to go into too much. Obviously, you could go into more and do an AVM and understand what the valuation is. But honestly, if you just looked anywhere in Perth you've made money. So if you just looked at something from there, you could do a bit of a targeted approach and maybe do some comms that would actually hit a little bit closer to home than a generic email.
Yeah, I'm just thinking of a little like survey thing, but a real simple one that goes out just to say, what state do you live in? Do you hold, properties like, which states do you hold properties in, sort of thing? And something along, I don't know, another question, but just like maybe 2 or 3 questions and then have that information in the back end. And then because like people that are listening, they might have a connection of someone in Melbourne, for example, property manager, and then we can start doing some cross marketing with connecting, those clients to say, like if it's Victorian, say, hey, send out an email just to those people to say, hey, I've partnered up, we're going to do a webinar with the PM there. And that would be a really cool thing to do.
Absolutely.
We turned today into a marketing session for BDM.
Yeah, well, I was going to say, like, the more data you can get, the better. Like, what we've actually created at Folios, we've got a national investment report that we do each month that we kickstarted this year. And so that's a free report. It's all of our data as well. So it's like, it's good quality data. And because we're giving away a lot of our good data, all we ask, like we're not spamming them, we don't contact the clients. We just ask them to answer 5 questions. Answer 5 questions and then they can get the report. And what that's allowed us to do is actually start tracking investor sentiment. So we can now start seeing, so just looking, like I've had 500 people apply, have filled out this survey last month. And if I'm looking, I'm just scrolling through the data as you're talking now. One of the questions is, on a scale of 1 to 10, how confident are you investing in property in the next 12 months? And over 80% are confident, and that's just across the board. But when you look at Perth, 95% are confident. So we're now starting to track that data because it actually gets us a good understanding on what the markets are doing from both the national level and then also from an individual city. So, if you looked at I don't have the data in front of me, but if I looked at the Victorian or the Melbourne clients to fill that survey out, I guarantee they would be confident in investing because their market's been stagnant for the last 4 or 5 years. So any sort of data points you can get, it helps you from understanding what you're from a BDM perspective, like who I should be targeting, but also helps you understand what messaging I should be saying or what sort of emails I should be saying there as well.
Yeah, absolutely. And before we finish, did you say you had a little chart that you wanted to show us?
Yeah, I don't know if I've showed this one. So I think this could be a pretty good one because I've definitely showed the affordability index. So you'll hear me mention in these talks each month. Let me know if you can see.
Yeah, I can see it. Yeah.
See this? Okay, cool. So you'll hear me talk about the affordability index. So everything is around supply and demand to understand if a market is going to go on is in a good position to go on a run, or if it's heating up and there's a good opportunity to invest. But one of the big things we say outside supply and demand, so let's just use Perth as an example because this is a Perth update. Everyone says to me, okay, when are we going to cap out? When's it going to slow down? You're always going to look at supply and demand. As everyone knows that tunes into this, there is no stock in Perth at the moment, and there's a high demand. We've got the highest population growth in the country. So one of the big things for us there's two things that I see that can affect the slowdown that isn't regarding supply and demand, and that is affordability and sentiment. And that's why we're starting to track the sentiment, because we want to understand what people are thinking. And just to give an example on sentiment before I show you the affordability tracker, sentiment, give you a good example, the AUKUS program we just spoke about in Henderson, that got announced. 3 of the top 5 suburbs last year were all in that area. And that's because the sentiment of everyone going, I need to get in there because that's going to drive 3,000 jobs from over east. They're going to want to stay somewhere close by. And that's why they're investing there. So sentiment's driven that market before anything's even been actioned. Same thing with the first homeowner cap, no LMI, increase going to 850. When the government announced they were pushing that forward to October, we already saw in September the market go on a run because the sentiment was there. So the only other thing outside of this affordability index that will slow it down is sentiment. I'll just zoom out so it's not so... Okay, so this is, you've probably seen some bricks up. This is the affordability index. So this is where we're talking how much of the median household income is going on the median household mortgage. So at Perth's peak, it capped out at a house level at 49%. Now, people say to me, Perth's unaffordable. At the moment, this hasn't been updated. We're actually at 39, so it's crept up even more. So we're at 39%. So we've still got 10% to go from the historical level, how much people spent out of their salary on their mortgage. And just to give this context, all the other capital cities, Perth and Melbourne are the only capital cities not at their historical peak. Every other capital city is at their peak or heading towards their peak or has broken through their peak. So to give you an example, Sydney was at about 63%, and it passed its historical peak, and now you've actually seen Sydney flatline. So Sydney now has hit its historical ceiling. It went through a little bit, created a new ceiling, and now it's starting to flatline. So that's why we look at, going back the data here, we're going back sort of 20 years or 20 years in this instance. It's important to look at long-term trends. So this shows you, like, historically, people in Perth spend 10% more of their salary on their mortgage. But people go, well, what does that mean? What does 10% mean in terms of property prices? So this is a new index that we've got. And this is our runway index. So what this actually does is this tells us, okay, so looking at all that historical data, I think it's at about, I think the example my mortgage broker friend told me 4.79. Looking at historical data and looking from a price perspective, this takes into account where we see the ceiling being. So if we look at here, this is on a 5.79% interest rate. The Perth property market for houses and is going to cap out at 1.23 mil. So looking at historic, so that's a median house price. Depending on where you look at it, it's ranging between $950 and $1 million for median house price. Our data, as far as this is concerned, is at 960. So when we get the latest data, it might start increasing to a mil. But on the current repayments, this is where we see the market capping up 1.23. The powerful thing is, so when I mentioned what will slow a market down is the affordability. So once we start to get to that 1.23, that'll be its historical peak. We'll start to see it slow. However, if we see another rate increase, so let's call it 6.0, let's call it 6.1. The new ceiling is 1.16 million for Perth. So the two things I see that can slow the market down while there's such a lack of stock and the demand is through the roof, but the highest population increase in the country is going to be affordability. So we see some more rate increases. Historically, they haven't affected people in Perth because we have the highest median salaries besides Canberra, and our property prices weren't reflective of some of the other capital cities. Now we are getting to that point. I think you will start to see those rate increases affect people in Perth. So if we do see another rate increase in the next 3 or 6 months, it will reduce from historical data, the max cap at 1.16, which is probably another 10-12% growth, depending on where we're at, 10-15% growth. Now that is looking at historical data. So, Perth could break through the ceiling and go beyond 50% of the combined household income on the mortgage, but we do see that being a key factor. So for us, I think the market slowing down will be sentiment or affordability will start hitting towards that peak, or any interest rate rises will actually increase, will actually speed up the process in terms of a slowing event.
And with the affordability, I know you refer to the mortgage, but I normally have always used that same stat for the rental affordability.
Yep.
That's fair to do?
Mm-hmm.
Yeah. So then really that sort of breaks it down. There's so many interesting parts of the stats that business owners and BDMs and property managers could use, because you can get reports that showcase the what the median household income is for an area. So then as soon as you know what the median household income is, well, then you're sort of going to know where your portfolio is going to sit. And even if you have a client that's buying in the area, you'd sort of want the rental property to ideally be around that 39%, for example, or maybe 49% tops, but you'd want the rent return to be matching what that median house price is to get the best value out of an investment. And if the owner's investor is going to buy a property where that's going to exceed, well, then there's going to be a lower market available. So having that data or understanding that was just a real sort of casual mention, but if BDMs know that, then when they're having these conversations with owners wanting to buy a property worth however much, it's fine, but because it sits outside of what we're expecting to see, there's going to be a slower market, which can mean this and that, or sometimes it actually means that if there's a slower market, you're going to have to bring your property back from a rental point of view as well. So but those knowing those numbers is really, really important. Me included, I don't tend to study it and use it, but I can see the value of doing it.
Absolutely. And I think, the rental affordability is very similar, the way it's worked out to the mortgage. And I'm actually probably a couple of months away, we're actually working on an index that looks at both to help more from an investor standpoint. So the affordability index focuses on the general market, but incorporating the rental index as well will actually help us from an investor standpoint too. So, maybe in the next 3 to 4 months on these updates, I can show you some of those indexes that we're working on. But yeah, you're right, Ash. There's data sets out there that have something similar from a rental side already.
Yeah, that'd be good to know. Amazing. All right. Well, thank you. That was actually good just having a conversation about some of that for what we're seeing. So, as opposed to sharing too many slides.
Yep.
So for those that are watching, I think we might even potentially move the next one. I was just looking at the days, even potentially till the June type of things for the end of the financial year is what I'm thinking. So if you're watching today, that's what we would probably plan to do. But we'll jump off this one because we're going to go do our Melbourne one. So thank you for those that are here today and watching the replay. And I will see you in the Melbourne market one.
Sweet.
Thanks, Reece.
Excellent. Thanks, guys.